Hey everyone, today we're diving into XRP, and I've got to start with something absolutely massive that just happened. The US Treasury just bought back $12.5 billion of their own debt. And get this, it's the largest Treasury buyback in history. This isn't just a random financial move, folks. We're going to see a lot more of this because other countries simply don't want US debt anymore. And here's where it gets really interesting. They're eventually going to tokenize this debt as well. Even our national debt could benefit utility-driven cryptocurrencies like XRP. Crypto analyst Paul Barron recently made a brilliant observation. He said, when the Federal Reserve brings water, XRP brings fire. What he's talking about is how the Fed's decision to end quantitative tightening is already shaking up crypto markets, including XRP and Bitcoin. Sure, everyone's talking about Bitcoin's latest move up, but here's the thing. This new liquidity era actually favors utility tokens. Think about it. The crypto community is buzzing about how this coming liquidity wave could really amplify tokens with actual real-world use cases. An XRP commentator, Finance Bull, made a fantastic point. As liquidity returns, XRP is perfectly positioned to do exactly what it was built for, moving money at scale. Here's what makes this cycle different though. Unlike previous cycles that were driven mainly by hype, XRP now has something completely different going for it. Real-time settlement utility, institutional integrations, ETF exposure. Finance Bull concluded with something I found really powerful. When liquidity floods back into the market, it exposes which assets are truly ready for scale. And XRP? It's absolutely one of them. I've been saying this for a long time now, and I think it's worth repeating. XRP could actually strengthen the US dollar. Think about this. It could move dollars around the world in a matter of seconds for less than a penny. That's incredible efficiency. But it goes even deeper. XRP could take the US dollar into areas it's never reached before, certain third world countries, banking the unbanked. This technology is going to be everywhere at some point. Now, Ripple is still laying the rails for all this to happen, but even in its current form, XRP could strengthen the dollar. And here's the kicker. It doesn't even have to be in digital form to make this impact. Someone made a post that I absolutely loved. They said they'd pay money to watch a side-by-side comparison of MicroStrategy's business model versus Ripple's business model. They described it as comparing a Pinto with debt to a Rolls-Royce with no debt. That's such a perfect analogy. And honestly, you don't need to be a Wharton graduate to see the difference. But I'd love to hear what a finance expert would say about this comparison. The difference between MicroStrategy and Ripple Labs is absolutely astonishing. Look at what MicroStrategy is backed by: Bitcoin holdings and convertible notes. Meanwhile, Ripple Labs has zero debt and brings in money every single day. That's why Ripple's balance sheet is just so incredible. To me, MicroStrategy just looks like a Ponzi scheme, but that's just my take on it. Here's another massive development. Crypto mergers and acquisitions deals hit an all-time high in 2025, blowing past $8.6 billion. And guess who's high up on that list? Ripple. Check out these numbers. Ripple's Hidden Road acquisition, $1.25 billion. Ripple acquiring Treasury, $1 billion. Ripple acquiring Rail, $0.2 billion. This year has been absolutely incredible for acquisitions, even outside of Ripple. And here's what's really exciting. Brad Garlinghouse has mentioned they plan to do even more acquisitions. So 2026 is already looking incredibly bullish for both Ripple and XRP. Now, about Larry Fink, take a listen to what he says here.
Called crypto an index for money laundering. BlackRock...
And thieves.
And thieves.
Yes.
Money laundering and thieves.
Right.
You now have the biggest Bitcoin ETF. So what happened here?
I have very strong views, but that doesn't mean I'm not wrong. By having strong views, you have to test yourself and ask yourself. And, in my role, I see, thousands of clients a year. I have, governmental leaders. And we have these conversations, and my thought process always evolves. And this is a very glaring public example of a big shift in my opinion.
Honestly, I think Larry Fink still thinks the same way about Bitcoin that he always has. But here's the reality. His customers wanted exposure to crypto, And that's exactly what he gave them through those ETFs. It's all about money for BlackRock at the end of the day. But if you start looking deeper, BlackRock, in my opinion, is really a shell company for the elites. And interestingly enough, Ripple is also very well positioned with those same elites. Here's something I strongly believe. There's an NDA between BlackRock and Ripple, and something much bigger is building in the background. That's exactly why we don't see a BlackRock XRP ETF yet. Maybe it comes later, maybe it doesn't. But here's what I know for sure. BlackRock has XRP on their balance sheet. Nobody can convince me otherwise. Bloomberg senior research analyst James Seifert recently said that outflows from crypto ETFs are being over-exaggerated. Take a listen.
Look at the headline number and you look at outflows from the Bitcoin ETFs and the Ethereum ETFs, and you're like, oh, tons of money is coming out. But in the grand scheme of things, it's like a couple percentage points of like the money that has gone in over the last 18 months. So yes, the numbers are big, but that's because the numbers have been absolutely massive that went into this product. So the Ethereum ETFs have had about 2.5 billion of outflows. That's the one I'm going to look at real closely here. And one of the things I just want to point out is, again, the flows are small as far as when you look back, but 2.5 billion is a big number. But a huge part of this has to do with something called the basis trade. And a lot of hedge funds love this. Some people are probably used to hearing it more on the treasury side of things. But what you do is you basically sell the month contract, the futures contract for the front month or the second month, and you buy the spot at the same time. And what this does is it's a delta neutral position you can earn in like basically a risk-free rate. I won't say completely risk-free because there are issues, but that yield has gone up to 20% annualized at various different times. Lately, it's been around 10%. Now it's below 5%. We just talked about it. There's going to be hundreds of crypto ETFs launched, different variations, different leverage, different yield plays, you name it. But the other part of it is that we call it manufactured yield, which is kind of similar to what we were just mentioning. It's like these companies are using derivatives to give you leverage or extreme yield, like sometimes north of 80% by selling like in the money call options on really volatile stocks. So these manufactured yield, and we call them boomer candy, these products where they're going to give you protection on the downside, maybe cap your upside in some ways. Think covered call products. There's these products called buffer products. That is still going huge. It's growing extremely quickly. But at the end of the day, it's active ETFs. Active ETFs are here. They are growing extremely quickly. All the legacy asset managers that you know by name are now launching actively managed ETFs. We actually had some news today that Goldman Sachs is buying one of those companies that started those buffer products, those boomer candy products I was just talking about. So Goldman Sachs is jumping into the ring in a big way. They're still going to be, they'll be a top 20 issuer. They're already a top 20 issuer. We think they're going to go from like 17th right now to 15th with that acquisition. So there's a lot of movement happening. The ETF space is still very aggressive.
Yep. I wanted to play most of that clip because when he was talking about 80% yield, can you imagine the risk that comes with that? Absolutely insane. But here's what really caught my attention in his comments. He tried to downplay the outflows from Bitcoin and Ethereum ETFs. I honestly believe that money is shifting into XRP ETFs. Sure, some is probably going into Solana ETFs, HBAR ETFs, and others too. They don't like to admit it, but institutions are now looking past Bitcoin and Ethereum. That's exactly what's happening. Bitcoin got the first mover advantage, but people want new exposure now. They want something beyond Bitcoin. They also know what XRP is truly capable of, so why not get invested before it really amps up in price? But they always try to downplay these outflows. At some point in the future, I'm sure we'll see outflows on XRP ETFs too, but I don't think it's going to be as massive as what we're seeing with Ethereum and Bitcoin. Jim Rickards just dropped some serious truth. He says the next real crash will come from stablecoins. And honestly, he's not wrong. Here's his brilliant observation. Tether isn't too big to fail. It's too big to expose. Protect it only as long as it serves the system. Once its usefulness ends, it becomes the scapegoat for the next financial reset. Take a listen to this.
So my concern would be that, well, not just concern, just from experience, this will happen. The market will freeze up, exactly what happened in money markets and commercial paper in 2008. the Fed will be very reluctant to bail it out. I mean, the Fed gets criticized when they bail out money market funds, because they're not banks. I mean, bailing out banks is kind of their area of responsibility, but not money market funds. But they did bail out money market funds. Would they bail out the crypto equivalent of a money market fund? I'm not so sure. They might just let it fail as kind of a lesson. And then there you get into the issue of contagion, where a failure in one market very quickly leads to failures in other markets. Because if I'm the crypto holder, the stablecoin holder, and I redeem, and I say, give me my money back, and you say, sorry, I can't, we're having difficulties right now.
They're not going to bail out Tether. I think the US is using Tether right now. They're taking up a lot of those treasury bills and so on. But when they no longer need it, they'll just let it fail. And when it fails, it's going to pull Bitcoin down with it. It's going to drag the entire crypto space down. But here's the key. Anything that's not propped up by Tether is going to bounce back very quickly. Bitcoin? It's going to take a long period of time to bounce back if Tether ever crashes. And honestly, I think it's a ticking time bomb. It's going to happen. Think about it. They don't have an audit, plus they're offshore. They wanted to create a whole new stablecoin just for the United States. That alone tells you everything you need to know. Plus, they can't pass MiCA regulations. Every country around the world is on the verge of putting stablecoin regulations in place. So how does Tether stay relevant? I think we are very close to the beginning of the end for Tether. Former SEC Chair Gary Gensler recently said that every crypto asset except Bitcoin is highly risky and speculative. Take a listen to this Bitcoin maxi right here.
I think it's a risk asset, and the American public and the worldwide public has been fascinated with cryptocurrencies, but it's a highly speculative, volatile asset. And putting aside Bitcoin for a minute, all the thousands of other tokens, not the stable coins that are backed by US dollars, but all the thousands of other tokens, you have to ask yourself, what's the fundamentals? What's underlying it? You don't get a dividend, you don't get usual returns, and so the investing public just needs to be aware of those risks in this highly volatile space.
Here's my problem with this, and my anger with Gary Gensler aside. He's following the Bitcoin marketing playbook. In other words, he's promoting Bitcoin as being better than all other cryptocurrencies. But here's what really gets me. He knows for a fact what Ripple and XRP are capable of, yet he's pushing retail investors into Bitcoin instead of telling the truth about XRP, and most likely every other cryptocurrency he knows about, like XLM, XDC, and others. That's worse than anything. That's exactly why I hate mainstream media news. They keep people out of assets that aren't gambling. Instead, they just want to herd everyone into Bitcoin and Ethereum. You don't have Tom Lee on mainstream media promoting Ethereum. You have Michael Saylor promoting Bitcoin. But why not promote something that solves a real-world problem? Because nobody wants you holding XRP. They don't want you buying XRP. They want you buying the distraction. But here's the truth. They don't want you buying the disruption. And that's exactly what XRP is. When everything comes crashing down, XRP is going to rise like the phoenix from the ashes. Gary Gensler is on that same hype train with Bitcoin, and I'm sure somebody's paying him to say what he just said. That's been the narrative this entire time, and it's not going to end until the rise of the new financial system. They're going to keep hurting retail investors and using them as exit liquidity as long as they possibly can. But eventually, this will all come to an end. Wait until the day happens where XRP flips Bitcoin. I am telling you, you will not hear about crypto that entire day on mainstream media news. Because that ends all of it. That ends the entire belief system in Bitcoin. And I'm telling you, it is coming. You can already see it loading as technology continues to move forward. It's making Bitcoin less and less relevant every single day. The truth is, we're watching a coordinated effort to keep retail investors away from utility tokens that could actually change the financial system. While everyone's focused on the price movements and the drama, the real revolution is happening in the background. We're not just watching market movements, we're witnessing a complete restructuring of the global financial system. From secret NDAs between major institutions and blockchain companies, to the planned obsolescence of certain stablecoins, to regulatory bias towards speculative assets over utility tokens. XRP isn't just another cryptocurrency. It's positioned to be infrastructure for the new financial system. That's why there's so much effort to keep people distracted and looking elsewhere. The question isn't whether these changes are coming, they're already here. The question is whether you're paying attention to what's really happening behind the scenes, or if you're falling for the distractions. What do you think about these connections? Are you seeing the bigger picture forming? Let me know in the comments below, and don't forget to hit that subscribe button for more deep crypto analysis.